How do you react to the stock market's volatility? That's a great question that I recently got, and I want to cover it in this episode of the Q&A series. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now this is once again the Q&A series. These videos don't get that many views, but I think that they're the most important videos as it relates to helping you guys become better investors, and that's really the goal of this channel. And so let's get right into that question. And so I think that was a great question. How do you react to the market's volatility? Well, the way that I'll describe this is by using the super sophisticated stock analyzer tool. And really, I just put super sophisticated in quotation marks because this is essentially a free download which you can get from the description below. And what it's doing is it's really making fun of the stock analyzer tools that these other YouTubers provide and they charge you for. There is no tools or shortcuts with investing. All you can do is do the work. And so, I find it funny when these people try to sell you this crap on YouTube. But, as it relates to the stock analyzer tool, it really just asks you 4 questions. And these are 4 questions that you got to ask about the company. And I put some points here that you should really go through. I have done a video on this, and so you can search my channel for the super sophisticated stock analyzer tool. But this question about, how do you react to market volatility? I think this really comes down to question number 4. And the question is the company selling at an attractive valuation? Well, the underlying assumption here is first you've built a model on it, or you have a good understanding of the company's value. You don't necessarily need to build a model on it. I really like building models on companies because I'll see things that, I may miss just from reading the financials, but it's up to you how you want to do this. And so, I think a great company will often satisfy the first 3 questions. And here's generally where I struggle with buying securities, is that it often does not sell for a large enough margin of safety for many, many years. And, here's where market volatility can create opportunities to satisfy this criterion. So I'm always on the lookout because ultimately, a high margin of safety is our best way to save ourselves against errors in our analysis. And, I will be the first one to admit that, my analysis is not perfect. I make mistakes all the time. The whole reason why I build models and I build the tracker and all of this stuff, and I try to stay humble, is because I know that I'm going to miss things. And so having a large enough margin of safety helps us in that situation because it protects us from our own ignorance. And that's great, I think. And so when we talk about market volatility, essentially what we're doing is we're talking about an age-old concept called Mr. Market. Now, some of you guys might not be familiar with Mr. Market, but just in case if you are not, this is effectively what it is. Mr. Market is actually a term used to describe the stock market and its tendency to fluctuate based on investor emotions. And so, there's a stat out there that says that the average company's share price fluctuates by as much as 50% every year. So that's another reason why it's really important to have a tracker, because the tracker will, if you look at the tracker every day, you can see when companies are wildly swinging. I don't think companies really swing that much a year, but that's kind of what I read once. And so, the idea is that Mr. Market is a helpful but moody friend who's willing to buy or sell shares in a company at different prices depending on its current emotional state. And I think, a lot of us have felt, our internal Mr. Market at one point or another. Some new news comes out or something comes out that really scares you, and then maybe I should probably sell this stock at a valuation that's much lower, or at a price that's much lower than what I paid for it, etc. I think we all have those tendencies. It's another reason why I sort of have my tracker, have my models, because sometimes, I'll feel like that, and then I'll go into my model and I'll be like, okay, why did I buy this company in the first place? And so, I go through the model and it just sort of calms me down. It's like, look, this is happening right now, but this is sort of the long term for this company. And so I'm okay. I'm likely still going to be correct here, even though the company is going through this short-term thing. And so, I feel like, Mr. Market really impacts us all. It's all within us. We all have emotions. We can't pretend like we all have this amazing emotional state because, I've had a pretty decent track record with investing, but I will tell you that I am also very susceptible to my own emotions. And so I sort of have to find ways to calm myself in situations where, things don't necessarily go the way that I want them to go. Let's get back into this. And so, the investor can can choose to take advantage of Mr. Market's mood swings in 3 ways. So one, he could be buying when the market overall is pessimistic. And so, this is be greedy when others are fearful. That's that quote right there, or part of that quote. The investor could be selling when Mr. Market is optimistic. And so this is that be fearful when others are greedy quote right here from Warren Buffett. So that these 2 points pretty much personify that whole quote. And then finally, you can ignore Mr. Market altogether by focusing on the long-term value of the company. And that's the concept that I was talking about earlier, where I said, there's times where I hold a security and the stock goes much lower. And so I have to decide, am I going to ignore him? Am I going to buy more? Or am I going to sell because I've ultimately been proven wrong on my thesis? Now, I'm so risk averse that generally this doesn't happen. I'm more likely doing this or more likely just ignoring altogether. And so you guys let me know what your interpretation of Mr. Market is. But here's the thing. The one secret, I guess not so much of a secret, but the one thing that sort of keeps me grounded is the fact that I have a tracker. So the tracker allows me to see these opportunities, but the other thing is it's the models that are behind the tracker. So if I own the securities, I can constantly remind myself of what the long-term characteristics or long-term thesis is for this particular company and investment idea. And if you haven't seen the tracker, this is it here. Anytime on the tracker I highlight a company with the green highlight, it means that it's a truly exceptional company. So you can see that I've highlighted Microsoft and H&R Block green. Alibaba's white because Alibaba's a great company, but it's not truly exceptional. There's some qualitative questions that I asked to the right of this that you can see when you get access to the tracker. And then if a company's sort of like orange, they got some things that are good about it, but other things that may not necessarily make them truly exceptional. So that's what AMD is. And so, the tracker, it really helps me stay on top of market fluctuations. And because what it does is it takes the current share price and automatically compares it against the intrinsic value that I've allocated to the company. Now, that's just my opinion of what the intrinsic value is. It's not investment advice or anything, but every day I log on to the tracker and I see which companies are trading low, which companies are trading high, etc. And are there opportunities for me to deploy more capital in the market? And if you want access to that tracker, you can get access to all of my research at this lower tier of the Patreon. I really think that the lower tier of the Patreon is the best value on YouTube when it comes to just sort of like learning how to build out models, learning how to look at companies. And so I highly encourage you guys to take a look. Now, what you guys may not realize is I'm slowly building out a whole library for the Q&A series because I feel like that's the greatest value that this channel provides. And so if you've missed any of the videos, no problem. There's a whole playlist for very important Q&A series questions that have been answered in this link right here.